think most of our viewers know you're the head of Altimeter Capital. You're a big tech investment firm. You've got top holdings that include NVIDIA, Amazon, Alphabet, OpenAI, Microsoft, lots of others. So let's talk a little bit about what you're seeing in the tech economy, in the broader economy, and where things are headed, because there's been a lot more volatility lately.
Yeah, I happen to think that volatility is good, and let me tell you why. Yeah. We're coming up on the 3rd anniversary of ChatGPT. We've come a long way fast. You've seen NVIDIA add almost $200 billion of revenue in the last 3 years. Yeah. Truly extraordinary. Transformational phase shift, super cycle going on in our economy. It added 100 basis points to GDP this year. But remember, this year we had 225% drawdowns in NVIDIA. It hit $90 earlier in the year on the DeepSeek scare, right? And so there's going to be volatility when you're early in these phase shifts, right? That wall of worry prevents the bubble that everybody's worried about. And when you look at the multiples today, take NVIDIA, for example. I think it's trading at 23, 24 times fully taxed earnings on next year's numbers, 18 times on 27 numbers. That is not the stuff that bubbles are made of. Right. I think the rest of the Mag 7 all trades somewhere between 25 and 30 times, maybe Meta's at 21 times earnings. So to me, taking a little of the gas out, having some of these, conversations and debate, very healthy. And what I see out there right now is a tremendous amount of progress on the model side. But I think the diffusion, the rate at which this transforms lives, both consumer lives and enterprise, that takes time. And that's what we're seeing play out. We're seeing the debates about NVIDIA versus Broadcom, Google versus OpenAI.
Well, yes, and that's what I was going to get to. Is the new version of Gemini better than ChatGPT?
It's terrific. It's terrific. Remember, a year ago, we were counting, Google out of the equation. I've said on Twitter and otherwise, we own Google. Yeah. I've said it's very difficult to pick a winner here. So you can own them all. You can own OpenAI and Anthropic. You can own Google and Microsoft. And I think at this phase, you probably should do that. I think Google's done an incredible job. Remember a year ago, Satya was saying, we're making Google dance. Mm-hmm. I think Sundar is making people do a little dancing today. Yeah. And so that's part of the competitive dynamic that I think is great for the country. It's what's going to keep us on the leading edge.
That's great for the technology spending. There are a lot of questions about what this means for the business world, too, for enterprise. Yesterday, Jensen Huang was on Squawk on the Street with Jim Cramer, talking a little bit about that deal that they did with Synopsys. And that was pretty interesting to hear how it's got to be able to be used by these big industrial companies to be able to really make the next steps. Right. And Jensen made the point that I thought was really interesting, that 90% accuracy is okay if you're dealing with consumers. It is not okay if you're in any of these big enterprise issues.
That's right. That's right. Think about it this way. The machine that builds the machine, right? That's really what he's talking about. We saw that with Tesla and Elon, right? Elon used to talk about we can't get to where we need to get to with electric cars until we first build the machine. Right? A totally new way to manufacture cars that can drive down the cost. And that's what you see Jensen talking about, for example, in the design of chips, right? That you really imbue the entire industrial economy with AI. And all of those benefits lie before us. I think we're heading into a very significant productivity boom. I've talked about the golden age of margin expansion for a lot of industrial and other companies in America that can simply do more with less. Our economy is going to see that productivity tailwind. But it's never a straight line up and to the right, Becky. And so I think for people who are watching it, you've got to anticipate we're going to have volatility. I remember early in the internet super cycle, Google would be up 5 or 10% a day. Remember when Facebook went public? Right. And then it broke $20 a share. Right. It broke issuance because everybody was worried. Could they possibly monetize on these mobile devices? When you're early in these super cycles, there's a lot of questions. And that's where we are today.
You're talking about the winners that came out of that. There was a lot of volatility in pets.com, too.
For sure.
Webvan. And by the way, those companies went bust.
And there are going to be companies in this cycle that go bust. Yeah. There are 1,000 companies in Silicon Valley valued over $1 billion that are trying to raise money. It's not going to be equally easy for all of them. Right. But I think that's part of the process of creative destruction. Right. It's OK that, that some companies aren't going to make it.
We talked earlier this morning about some comments from Masa-san, who said that He didn't want to sell his entire NVIDIA stake, but he had to in order to be able to put it into OpenAI. You've got bets on both of those companies.
Yes.
What do you think about that?
I wish my bet in OpenAI was as big as Massa's, but you know,
would you sacrifice your NVIDIA bet for it?
No, like I said, NVIDIA has been an extraordinary winner. We invested in NVIDIA in December of 22, right after we saw ChatGPT. The stock's up over 10 times. 10x over that period of time as the revenue went from roughly $30 billion a year to over $200 billion a year. And they just told us that we should expect a run rate by the end of next year of $100 billion. And this is at the same time that Broadcom is doing extraordinarily well. What Hock Tan has done partnering with Google to build out TPU 7 is extraordinary. That's going to force NVIDIA to be even better. So I think we've seen a lot of winners, and you can see from the logos that Altimeter owns, our choice has been really to own a lot of the best names that are benefiting from this super cycle.
It's time for Jim and Stop Trading.
Jensen Huang's a great spokesperson for NVIDIA, of course, but Colette Kress is an amazing CFO, and she's at the UBS Global Technology Conference today, and she's talking about how, it's something that Jensen made, first of all, 90% of CPU for PC server, now it's 90% GPU, that's him. That's going to happen for the rest of the of all technology everywhere. But the other thing that she's doing is mentioning, look, the new orders are right on top of the old orders. They don't rip out the previous, but they don't take Blackwell and get rid of the previous iterations. Most important thing she's saying, people have to start to understand this, she's a big believer that a lot of what you hear about is wrong, that these companies are making billions of dollars. And the idea that the CapEx is too high is totally out of whack. And what she would tell you is, if CapEx was too high, why did Google just add 100 points and is one of, if not the biggest buyer? And the answer is that it's a canard. Everybody's making a huge amount of money off NVIDIA, but everyone's crying poor. And that's not happening.
Right. X OpenAI, in your view.
OpenAI is, Carl, that's cool.
Yes. Right.
I don't want to say it.
NVIDIA's PEG ratio, Jim, I know you love this metric, is 0.95. Look at the top 20 largest market caps in the S&P 500. It is the lowest of the largest 20 companies right now. Do you know what the expected earnings growth is supposed to be year over year? 62%. So it has the highest expected earnings growth for the next 4 quarters and the lowest PEG forward-looking out of the 20 largest stocks in the market. What is the argument against the Mag 7? That there's headline risk? What are we doing here? So I think both ideas are correct, and that's a really healthy market. The generals are going to work, and the broadening out. Look at that RSP about to make a fresh high. That's bearish? What planet are people from?
No, but
yeah, and I wonder, what is that going to cost OpenAI, right? Because their model's a little different, and what we saw with Gemini is that they built a world-class model using TPUs. That is such a key point. Google is able to do things like distribute it through AI mode, potentially billions of users. Question, what's going to power the Apple chatbot? Is it going to be Gemini? We know that TCUs have brought down the cost. And that's a huge advantage that Google now has over OpenAI, or maybe OpenAI, it's already been reported, going to turn more to TPUs as well. I'm sure Tae has thoughts on this.
Go ahead, Tae.
I think all this discussion about TPUs is really amusing because Google released the specs on Ironwood back in April, and now everyone's surprised. There's this thing called TPU that exists. NVIDIA's NVL72
It's not that though, Tae, is it? It's the fact that they trained Gemini 3, which is the leading model right now, fully on TPUs, because you can say all those things, but the proof is in the pudding, isn't it?
Well, Anthropic just beat Gemini, even though part of that
trained
is
on TPUs.
Yes, but like I said, the NVL72 GB300 Blackwell, which is a much more performant version of the NVIDIA chips, have just gone live in October. And when OpenAI trains their latest models on those chips, it's going to be much more performant.
Guys, what's a TPU again?
Tensor Processing Unit.
Okay.
Their custom AI chip that's unique to Google. You need to be on the Google Cloud to use it, which was sort of a knock against why people would use TPUs, right? You don't want to, Meta doesn't want to put all of its business onto Google Cloud, but the fact that they're more performant, we can show you an element too, over NVIDIA's chips. I think we're just only seeing the beginning of it.
What is it? Go ahead, Tae. How does that make it
facts.
different from I understand, I know the CPU, I grew up in the 90s. I know the GPU, Tae. What is it? What exactly is a TPU?
EPU is similar to GPU, but GPU is more flexible, but it's basically an ASIC, a fixed function ASIC that is kind of made to do AI workloads that Google has worked on for over 10 years. Google talks about all these specs and performance metrics, whatever, but the reality is those are specs. And when you have to integrate the entire the network, the data center systems, all that stuff in real life, things are different.
So does NVIDIA not offer this? Tae, continue because I note, and you've pointed this out. The CEO has described himself as a software company that makes chips, right? So just please integrate all of these themes.
So basically, TPUs is the AI chips that Google makes, and it's primarily used for internal workloads, and it competes with NVIDIA GPUs. They're similar, except GPUs are slightly more flexible overall. But the funny thing about everyone talks about TPUs, Morgan Stanley said the actual amount of TPUs that were made this year were down, and Google market share for NVIDIA GPUs at Google Cloud went up this year. And people are freaking out about this Meta deal, several $1 billion in 2027. Let's put that in context. If it's a $3 billion deal, that's less than 1% of NVIDIA's revenue in 2027 So everyone freaks out, but the reality is all this is moot because we're in a massively supply constrained environment. So everyone's like dying for compute capacity. And that's why, people are going to NVIDIA, people are looking at Google. But I think the reality is we're in this overwhelming demand situation, and everything is sold out for a long time.
I was just going to say, yes, we're in a cycle where everyone wants this demand, but NVIDIA sort of has the dominant position. Tae, are you saying that that's just going to continue unfettered, that other hyperscalers are going to look at these efficient TPUs and say, okay, if we can't get our hands on enough GPUs, we're going to go for them? Do you really think that NVIDIA can just keep the dominance that it has, even with TPUs? We heard from Amazon today with their own custom AI chips.
So I'm very confident NVIDIA is going to be dominant over TPUs. If you look at the customers,
the same dominance, though.
Yes, maybe it'll go from like a couple percent to 5% in a couple of years. That's not a big deal.
Big move, isn't it?
When the market is growing at 50% per year and you lose a few percentage points, and if you actually look at the customers, it's really only Meta, like Amazon and Microsoft. The major hyperscaler buyers, they're not going to buy Google TPUs because they compete with them on the cloud side. And there's only a handful of startups that have the software sophistication to actually put TPUs to use. The vast majority of enterprises, corporations, sovereign cloud are going to use NVIDIA because it's the most optimized chip. They do the best performance every year on this annual cadence. And they don't have the crack software engineers that a handful of AI model startups have.
I love it. I appreciate this.
All right, I hope you're all doing great today. Today, NVIDIA's CFO, Colette Kress, spoke at the UBS Global Technology and AI Conference. I'm just going to rapid fire important points that stuck out to me. NVIDIA's CFO said that NVIDIA does not see a bubble at all. Instead, they see 2 to 3 major transitions happening simultaneously, including the transition to accelerated computing, as well as the transition to AI, which includes agentic AI. NVIDIA still sees $3 to $4 trillion in global AI factory build-out by the end of the decade. The interviewer brought up the topic of growing competition and asked if NVIDIA's lead was shrinking, to which Colette responded, absolutely not. Colette mentioned that most of what we're seeing today are additive new build-outs rather than upgrades of older generation hardware. NVIDIA still sees demand for Ampere and Hopper holding up strong, which bodes well for the neoclouds like CoreWeave, Nebius, and Iron. Also, NVIDIA is constantly updating CUDA, leading to an X-factor increase in the performance of older generation hardware, and that extends the useful life of the GPUs. Now, here are some important points. Colette said that all of the $500 billion that was shown at GTC is just with the cloud service providers. It doesn't include anything from OpenAI, and NVIDIA is working right now on the next part of the agreement with OpenAI. They haven't completed a definitive agreement with OpenAI, but they are working on it. Colette told us that Vera Rubin has been taped out and is still on track to launch in the second half of 2026. Colette was also asked about NVIDIA's growing inventory on the most recent earnings report, and she said that both inventory and purchase commitments are going up. She told us that what we saw in inventory on NVIDIA's last earnings report has at this point probably already been shipped to customers. There's not a surplus of supply as some had feared after the recent earnings report. Both inventory and purchase commitments are growing quickly. That's That's good. It means the business is growing. Colette also reiterated that the $500 billion cumulative revenue number that was shown at GTC will grow. Colette also outlined NVIDIA's 3 areas of focus when it comes to capital management. NVIDIA's first priority is making sure that they have the cash they need for their own internal needs. NVIDIA's second focus is shareholder return. This includes things like stock buybacks and dividends. And NVIDIA's third focus is strategic investments that expand the CUDA ecosystem. NVIDIA is not simply throwing money around. They're making very high probability strategic investments to further the CUDA ecosystem and generate a positive return for shareholders. And Colette pointed out that having model makers like OpenAI and Anthropic using NVIDIA's platform puts NVIDIA in a great position. Overall, I thought the presentation at today's UBS event was very good. In other news, AWS announced that they will adopt NVIDIA's NVLink Fusion in their upcoming Trainium 4. As I said repeatedly after NVLink Fusion was revealed, I actually think that NVLink Fusion strengthens NVIDIA's competitive moat, even though they're allowing chips from other companies to be used in their systems. This is because it increases the likelihood that customers will choose to remain within the NVIDIA ecosystem, even if a better accelerator comes along from a different company. NVIDIA is no longer just a chip company. They're an AI infrastructure company selling holistic AI systems. If a customer chooses to use an accelerator from another company, NVIDIA doesn't really care as long as they are still using the NVIDIA system and staying within the NVIDIA ecosystem. Also today, it's being reported that OpenAI Sam Altman sent out a memo to OpenAI employees saying that the company is declaring a code red effort to improve ChatGPT, focusing on improving the quality of the model and the user experience and delaying the launch of some products and features. I have no idea if this story is true or not, and I'm just bringing it to your attention so that you're aware of it. The AI race is heating up, and moving forward, we will see new models launched that will take the lead at any given moment. Overall, I think this competition is good for the ecosystem. It's also worth noting that many of the models that are available today were not trained on Blackwell. Many were trained on Hopper, and some even on Ampere. And even with the recent success of Google's Gemini 3, it's clear that the scaling laws are still intact. In other words, the more compute you use, the better your models will become. Gemini 3 showed that scaling laws are still intact, and that's good news for NVIDIA, even though Gemini 3 was trained on TPUs. As I've said in previous videos, there's plenty of room in this market for NVIDIA, AMD, Broadcom, and many other companies to all succeed as there is such strong demand. And I don't view the success of Gemini 3 or the success of Google's TPUs as being detrimental to NVIDIA at all, as I've explained in previous videos. Also, very briefly, I want to address Iron. As I said in the last 2 videos I posted yesterday, Iron announced both a senior convertible note offering that will allow them to raise about $2 to $2.3 billion, not counting fees and other costs. And they also announced a separate direct offering with the intention of using the capital from that offering to repurchase older notes and extinguish those older notes. At the time of recording, we're still waiting on pricing details for the convertible notes offering. As I said yesterday, I don't view this as a major cause for concern, and I continue to be bullish on Iron for at least the next 1 to 2 years. I don't like dilution, but I do like the way that Iron has structured this. We know Iron is seeing very strong demand, including from companies like Microsoft, and now they need to execute on their expansion plans in order to meet that demand. This capital will allow them to do that faster. I'm viewing Iron as a long-term investment for at least the next 1 to 2 years, and my fundamental view of the company has not changed. Now back to NVIDIA. I continue to think that most analysts are underestimating NVIDIA's long-term growth. While most analysts today are hyper-focused on NVIDIA's data center business, NVIDIA is actively establishing themselves as the underlying infrastructure of physical AI. NVIDIA leadership has called physical AI, quote, a multi-trillion-dollar opportunity and the next leg of growth for NVIDIA. This is not getting enough attention right now, but I think it will get a lot of attention in 2026 and 2027. I am completely serious when I say that I think NVIDIA's physical AI business may eventually be larger than their current data center business. There's a reason why I keep mentioning physical AI in these videos. NVIDIA sells the hardware for the data centers where the models are trained. They offer Omniverse where the models are taught and tested. And NVIDIA also sells the hardware that allows on-device real-time inference through NVIDIA AGX, allowing robots to have intelligent interactions with the real world even when they are not connected to a data center. Notice that NVIDIA is taking a holistic platform approach to physical AI, and they're embedding themselves as the underlying foundation supporting all of it. Over 2 million developers are already building on the NVIDIA robotics stack, and this is not getting enough attention. I continue to think that most analysts' long-term NVIDIA estimates are too low given what's ahead. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory build-out between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it. And I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day. And I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free and you can always change your mind. Thanks for watching and hopefully I'll see you in the next video.